Welcome to our PolicyCast series. India's direct tax framework is set for a landmark change on 1st April 2026 when the Income Tax Act 2025 will come into force, taking place of the decades-old Income Tax Act 1961. The corresponding rules and forms would also come into effect from this date. In the last episode, we had discussed how this transition from the 1961 regime to 2025 regime involves several changes for businesses at an operational level. In this episode, let's understand what lies ahead for the taxpayers during this significant transition. We are delighted to have our tax partner Riaz Thingna to share his insights on the developments and expectations for this transformative year. Welcome to our PolicyCast series, Riaz.
Thank you.
Must say that the FAQs and the guidance notes issued by the CBDT will facilitate ease of compliance for the taxpayers and the professionals. What are the key points covered in these FAQs and the guidance notes? Request you to highlight the key points covered in these FAQs and guidance notes for the benefit of the taxpayers.
Sure, Shilpa. The FAQs cover some key points which provide significant clarity. Firstly, the purpose and scope of each form is detailed. Clarity on who is required to file it and whether filing is mandatory or optional is specified. The due dates and the frequency of filing, the filing process, the mode of filing, and provisions for revisions or edits after submission are provided. Secondly, the supporting documents or information required for filing the form include certifications to be made by authorized persons are laid out. And finally, the FAQs highlight the consequences of non-filing, delayed filing, or incorrect filing of the form, along with the associated implications. The guidance notes, on the other hand, set out the objective of the form and provide the broad and qualitative changes proposed in the form, highlighting key modifications, additions, and the intent of such changes. The notes explain the structure of the form, its legislative and legal framework, and the authority under which the form is prescribed.
These FAQs and guidance notes would certainly facilitate ease of compliance for the taxpayers. So, one of the most discussed changes relates to the new Form 145 and Form 146, which replaces old Form 15CA and Form 15CB. What are the key implications here?
Yeah, at a high level, the new forms represent a substantial expansion rather than a simple renumbering. The new forms 145 and 146 together significantly expand the scope, depth, and accountability of reporting for foreign remittances. From a Forms 15CA perspective, several major structural changes stand out. Remittance-related disclosures have been substantially strengthened, while doing away with key legacy disclosures such as reference to Aadhaar number of the remitter and remittee and AO details for lower deduction certificates. The impact of the accounts certification, that is the new Form 146, is even more significant. The old Form 15CB was a relatively compact accountant certificate focused on beneficiary remittance, taxability under the Act, the double tax treaty and TDS computations. Whereas the new Form 146 converts this into a much more detailed and structured reporting, covering disclosure of comprehensive remitter and remittee details, specific mention of the list of nature of remittances in the notes. Also, a more granular reporting for double tax treaties, including disclosure of TRC number obtained from the recipient, and a detailed computation of capital gains is required in the new form.
Here, the taxpayers need to be careful regarding the additional disclosure requirements. So, my next question to you is, what are the key changes in form related to claim of foreign tax credit?
So, in the new form, there's a dedicated field for specifying the taxpayer identification number or TIN for the relevant foreign country or region in which the source of income is situated. The new form also specifies that income from outside India is to be net income, that is, gross income reduced by direct expenses and prorated indirect expenses incurred in connection with the gross income. The new form introduces a dedicated section capturing whether refund arose due to carryback, return revision, or other reasons, and requires structured reporting of the refund amount and the tax years in which the corresponding credit was claimed. Now, reason is also required to be provided for refund of foreign taxes paid. Further, in cases of availing foreign tax credit over a specified threshold, the form now needs a sign-off by an accountant.
Understood. So my last question is from litigation perspective. Appeals and the dispute-related forms have also been redesigned. What are the major shifts taxpayers should be aware of?
Well, the appeals framework has become far more structured, automated, and system-driven. For example, the new Form 99, which was the old Form 35, will be automated now. Most of the information being pre-filled or auto-populated, though there's still the flexibility of making edits wherever required. The statement of facts and grounds of appeal now require structured reporting, uploading of past appellate orders dealing with the same grounds, and linkage of additional evidence to specific grounds. There are also new disclosures for repetitive appeals, for TDS and TCS disputes, and for block assessments. While the intent is to improve the quality of appeal and reduce ambiguity, it also means taxpayers need to be far more precise, organized, and disciplined in appeal preparation.
Thank you so much, Riaz, for highlighting few important aspects to be taken care of while transitioning from the Income Tax Act 1961 to Income Tax Act 2025. We will be back soon with more expert conversations on tax, trade, and policy. Until then, thanks for tuning into PolicyCast.